We have a mess on our hands, and quite frankly, that's the only way I know to put this, and you would be excused, and it would make a certain amount of sense to simply be on the sidelines. There is speculation that there's going to be no more global trade, everything's going to fall apart, it's going to be Armageddon. We're now pricing that in. That's not the reality, and there will be a bounce, but we were in a downtrend to begin with. That gap is all the way down to the 148 yen level. Ultimately, at the end of the day, basically, you're looking at a dangerous way to trade right now with silver and a really good way to damage your account. So make sure, no matter what you do, keep your position size reasonable. I think silver is overbought. It wouldn't take much to send it tumbling, and I would anticipate that is going to continue to be the way forward. Hola Prime, this is Chris taking a look at your technical roundup. Friday was a pretty noisy day. We are starting to talk about trade war tensions yet again. That being said, this is going to be an interesting market to take a look at. I think we saw a lot of vicious turnarounds in the middle of the day, so let's get started. The gold market initially fell off a bit during the trading session, and that does make a certain amount of sense, but the market had turned around, and really at this point, the hourly chart shows that we pulled back and then rose again. The question, I believe, at this point in time is whether or not we are going to continue to see upward trajectory. I think this is going to be very difficult at this point to gauge where we might be going, mainly due to the fact that the overall attitude at the end of the weekend, we just don't know. We have no idea what will be said or done, but clearly Trump tweeting about the trade war continuing and getting worse doesn't help the situation. Silver rallied pretty significantly during the course of the session, but you can see gave it back a bit. I think at this point we are looking at a chart that gave up a bit of the gains and in a mirror to what we had seen in the previous session. Silver can't hang on to gains. Silver's very difficult market to analyze right now because the spot market finds itself right at $50. The futures market, not so much. So I think you've got a situation where the backwardation is something you have to pay attention to. It does suggest that in the future, people believe that silver will be lower than where it is right now. Other people will start to talk about the fact that spot silver is rallying because there's so much demand for physical. At the end of the day, basically you're looking at a dangerous way to trade right now with silver and a really good way to damage your account. So make sure, no matter what you do, keep your position size reasonable. I think silver is overbought. It wouldn't take much to send it tumbling, and I would anticipate that is going to continue to be the way forward. The euro has rallied a bit during the trading session on Friday, taking back some of the gains, really most of the gains that the US dollar had on Thursday, as the 1.16 level previous support is now probably going to act as resistance. Late in the day, we did see a little bit of choppiness. I think we're seeing hesitation. I'm still bullish of the dollar. There was a little bit of a backlash against the US dollar with the trade tensions, but really at the end of the day, that's a short-term thing. And what will be interesting to see is how this plays out, because the dollar had been punished for the trade war previously, but now we have gone through all of that, and the U.S. economy is still the strongest one out of all of the majors. So if that's the case, then it's very real here that we may see the market think about it and come to the conclusion that it didn't destroy the U.S. economy previously, and therefore it's not going to destroy the dollar. I still think something broke in the euro. I continue to look for selling opportunities. The British pound initially plunged below the 200-day EMA, only to turn around and show signs of strength. The 200-day EMA is, of course, offering a little bit of support. We are hanging around the 1.3350 level, an area that previously had been a little bit of support. So now I would anticipate that a little bit of market memory comes into the picture. Again, this is one of those situations where I think you have to be careful because, number one, I do recognize that the British pound has been a little bit stronger than most of its contemporaries. Um, in the past. And ultimately, I think you look at this through the prism of a market that might end up being a bit of a barometer, if you will, of US dollar strength. So, what I mean by this is that if we fall from here, the British pound falling against the dollar as it had outperformed so many others will more likely than not show the US dollar strengthening even more against plenty of the other currencies out there along the lines of like the euro and the Canadian dollar. So I still use this as an indicator more than anything else. We'll just have to see. The US dollar plunged against the Swiss franc after initially trying to rally, breaking back below the 0.80 level. This downtrend line being broken to the upside, and now that we're pulling back, we'll have to see how this behaves. Again, this is going to be a situation where we have to see what the weekend brings. There's a lot of weekend headline risk. We'll just see how this plays out. The US dollar plunged against the Japanese yen, which, quite frankly, is actually what I wanted to see. The 151 yen level is an area that has been previous resistance more than once. And I think if we break down below there, then we may go looking to fill the gap underneath. If that's the case, then it will be a major risk off type of move. That gap is all the way down to the 148 yen level. Ultimately, I think you've got a situation where you're looking for a drop and a bounce. We're starting to get the drop. The question is, now will we get the bounce? Again, this is a safety trade more than anything else, so it does make a little bit of sense. The US dollar initially dipped against the Canadian dollar during trading on Friday, but I don't even think this had anything to do with the tweet. This had more to do with Canada adding something like 60,000 jobs, which basically wiped out the previous losses. And I think that took some of the fear out of the Canadian dollar. That being said, this is a market that, if you are looking at this, we are in an inverted head and shoulders. So when you are looking at this, you have to be thinking maybe the measured move is worth taking a look at. And that would essentially end up being a move to about 1.43, maybe a little bit lower. I think that's reasonable. Short-term pullbacks offer buying opportunities that I will continue to take advantage of as the interest rate differential continues to favor the greenback. The Australian dollar has been crushed during the trading session. And if you remember, I said if there was going to be some trouble, the Aussie is going to be the first place to really start to break apart. Asian currencies are in serious trouble, the Japanese yen being the exception, except it lost several percent earlier in the week. So really, it's still in trouble. It's just that we are seeing some profit taking. The question now is, will the Aussie break down? The Aussie obviously has a bit of support at the 0.64 level. Anything underneath there gets ugly. This is a pretty ugly candlestick, so I would look to fade short-term rallies on signs of exhaustion. The New Zealand dollar has broken through support yet again, and I think it's not a stretch at this point. It's going to take some time to get there, but I don't think it's a stretch at this point to start thinking about maybe a move down to 0.56 and then 0.55. This market looks miserable, and I think this flies right in the face of risk appetite and how things are playing out in Asia. New Zealand is very sensitive to what's going on in Asia, and they are at the mercy of the Asian economies. Asian economies are probably going to get hit pretty hard if the trade war does in fact flare up. I think a lot of this is going to come down to how the Chinese react to the way Trump reacted. That's a lot to take in, and we have an entire weekend to sweat it out. So if that's the case, I think we continue more downward pressure. The euro tried to spike against the British pound, and you can see it has fallen. It looks like the 50-day EMA has offered support, and ultimately the market is forming a bit of a neutral candlestick. If we can break down below the 50-day EMA, then it's likely that we go looking to the 0.86 level underneath, which had been massive support. We are basically in the middle of a larger consolidation area between 0.86 and 0.8750. And therefore, I think you've got a situation where we are basically at fair value, I think. This is a choppy pair most of the time, so it shouldn't be surprising that we continue to chop back and forth. I think range bound trading probably will continue to be the way to look at this market, as it just, quite frankly, doesn't look like it has anywhere to be anytime soon. The euro got crushed against the Swiss franc. However, it still finds itself in the same trading range, although we are definitely going to be testing the bottom. This makes a certain amount of sense as people freaked out about the Trump tweet. They started buying the Swiss franc for safety, as they habitually do. If we break down below the 0.9250 level, then we could go looking to the 0.92 level. The 0.92 level is an area that is very important going back over the last year or so. If we rally from here, then the 50-day EMA is sitting right around the 0.950 level, followed by the 200-day EMA, which is at the 0.9375 level. Ultimately, I think if we get a bounce, this could be a value play. Although you better pack a lunch. This pair tends to move very slowly. And I think we have a scenario where we are probably still going to remain in a choppy type of environment. And with that being the case, it is what it is. We're getting close to support. Let's see if it holds. Right now, closing, heading into the weekend, it looks pretty horrific. But again, we didn't break through yet. The euro plunged against the Japanese yen, which I think makes a certain amount of sense as it is a safety currency. And ultimately, we are probably going to try to form some type of, or I should say, even fill this gap down here, uh, possibly even as low as the 173 yen level. It'll be interesting to see how that plays out. But ultimately, I think we will see buyers come back in trying to get involved. If that's going to be the case, then I think you've got a situation where traders are just trying to find those cheap euros in reference to Japanese yen. When I look at this chart, it's pretty easy to see that the 50-day EMA backing up the eclipse makes quite a bit of sense. And with that being the case, I just don't have any interest in shorting. But if we were to break down below the 172 yen level, then we could really start to fall apart. I don't see that unless, of course, we see some type of massive risk-off event over the next day or two. A little bit of a drift and a bounce. I think that's a nice opportunity to get long. So it should not be a big surprise that the pound got crushed against the Swiss franc to test the 1.0650 level. The 1.0650 level is an area that's been massive support, extending all the way down to the 1.06 level. So it's a cheap trade because if it works, it should be good for a couple of 100 pips. And if it doesn't work and we break down below the 1.06 level, then it shows that we have quite a bit of negativity that is going to continue to jump into this pair, possibly even the overall markets. Remember, the Swiss franc is considered to be a safety currency, while the British pound is a little further out on the risk spectrum. Although I don't know that I would make an argument that it is quote unquote risky. The size of the candlestick is, of course, negative, and that is something that you need to keep an eye on. If we do turn around and break above the 50-day EMA, then we could go looking to the 200-day EMA at the 1.0950 level. You do get paid to hang on to this currency pair. The positive swap is attractive, and if you are willing to hang on to it for a while, you can do quite well. It just is a market that I think is going to be very noisy. Speaking of the British pound against the Japanese yen, you can see that we are now starting to test the gap, or at least getting down there. I think you have a scenario where you have to be somewhat cautious, but the reality is that just like we see in other currency pairs, the massive gap higher that we had seen on Monday is probably going to be challenged. The market closed at the very bottom of the range. And if you remember earlier this week, I've been saying, unless you're willing to put a 4 or 500 pip stop loss, there's just no way to get long. Now you see why. Granted, Trump added fuel to the fire today, but the market just needed a reason to see this pullback. I am looking for it to continue a little bit and a bounce that I can jump in and take advantage of. It's worth noting that the 50-day EMA is sitting right around the 199.60 yen level. That, I think, offers a balance, but if we break down below there, then things could get ugly. But in that environment, you'll probably see the Japanese yen strengthening, the Swiss franc strengthening, indices around the world collapsing, which I guess is possible. But really, I think we still have a situation where this market is going to continue to be very interesting. I also would point out that you get nice positive swap here. So if we get that drop and bounce, it could be a nice long-term buy and hold trade. The Canadian dollar has just crumbled against the Swiss franc to test the lows. We are closing right at the lows. This looks horrible. The market tried to reach the 50-day EMA, but then it fell rather drastically as traders just don't have a reason to get long the Canadian dollar in general right now, and certainly not against the Swiss franc, because we are starting to worry about trade tensions, and it's probably only a matter of time before Trump starts to take aim at Canada again. Although maybe China will distract him. It'll be interesting to see how that plays out. This type of candlestick suggests that we could go lower. And even if we were to bounce, this is not the place to short the Swiss franc and get long with another pair or another currency. The British pound, I think, makes a much more appealing argument because it's got that interest rate differential. And of course, it does tend to move much quicker than this pair. You can probably um, go to sleep trying to trade this pair, so be cautious. The Canadian dollar is now falling pretty significantly during the trading session on Friday, and it's more of the same that we see in all the yen related pairs. The yen related pairs all look a little bit noisy and dangerous at the moment, but if we can fill this gap and bounce, I'm all about it. Now, again, I think this is a situation where you don't necessarily want to own the Canadian dollar, but it should follow the pound dollar, the US dollar, the New Zealand dollar, everybody else against the Japanese yen. The yen does tend to move in lockstep across the markets. I think that won't be any different here. So make sure that you keep that in mind. The euro had a big day against the Norwegian kroner. Um, Keep in mind that the Norwegian kroner is an area in the financial markets that is mainly driven by the crude oil market. And of course, we've had a lot of problem with the crude oil market. So the kroner is starting to suffer. We did touch the 11.75 level, an area that I had talked about a couple of times earlier this week. I didn't think we'd get there instantly, but here we are. The 200-day EMA sits right about where the candle stopped and pulled back to. It'll be interesting to see if that does, in fact, show a area that's really hard to break above, and if that ends up being the case, then I think you have to understand that this is a market that has looked at the 11.75 level closely multiple times, previously as support and now as resistance, and it has held. If we were to break above the 11.8 level, then I think the euro really starts to climb against the Norwegian kroner. I do not think that this is a pro-Europe move. I think this is an anti-oil and anti-risk move more than anything else. I don't see a lot of money flowing into Europe. And ironically enough, even though the euro closed higher for the day, the DAX had a horrible day. So it's not just everybody buying euro denominated assets if they can. Against the Swedish krona, the euro rallied, but it did give back some of those gains, right around 11.6 or so. The 50-day EMA offering resistance. This is a market that continues to be very noisy. The 11.08 level was an area that I had mentioned as a potential target. We got pretty close to that area and fell rather rapidly. Keep in mind, this is a market that is very noisy under the best of circumstances. And with that being the case, I think you have to look at this as a market that you have to trade on short-term charts. I'm not looking for longer-term trades yet, but if we can break above the 11.08 level, then the 200-day EMA right around the 11.13 level could be where we go next. A pullback from here opens up the possibility of a move to the 10.93 level. So in comparison to the other Japanese yen denominated pairs, the New Zealand dollar has found itself to be really weak against the Japanese yen, but it looks like we are at least trying to find some type of support. Ultimately, this is a market that if we can test the bottom of this gap, maybe we bounce. It might be a nice shot higher. We'll have to wait and see how this behaves. The 85 level, 85 yen, is an area that I think would be your next support level. I think this might be an interesting pair because if we see the Japanese yen get smoked again, although I don't like the New Zealand dollar, this one might be a big mover. This could be a harbinger of what we're going to see in the other currency pairs like the pound yen, the dollar yen, the euro yen, etc. The New Zealand dollar has gotten crushed against the Swiss franc, and this is a very bad sign. It's possible that we could really drop from here. The measured move of the candlestick is another 100 pips, so we could be looking at 0.4460 level. Short-term rallies, I think, are buying opportunities. You can also look at the hourly chart and just see how things fell apart. We were negative to begin with. Trump got involved. We fell harder, a couple days of stability, and then we fell even further. I think this is a pair that is a harbinger of the potential of negativity. The Swiss National Bank might get involved, but it won't be against the New Zealand dollar. What you really need to watch is the Euro Swiss, which, if you remember a while ago, I have the bottom of a range, not even all the way down to the bottom of the range, but it is an area that I think there's plenty of support. So we'll see. As long as the Euro Swiss is okay, then it's likely that the Swiss will be willing to look beyond the New Zealand dollar. There can't be much in the way of trade between the two. The US dollar has rallied significantly during the trading session on Friday to break above the 50-day EMA. The 50-day EMA being broken is, of course, a bullish sign, but it turned around to show signs of um, negativity. The 18.50 level is an area that I think you need to pay close attention to. Um, it is an area that previously had been support. Now it could be resistance. Now, keep in mind that this is going to move counterintuitively because if the U.S. slows down, then you could get a situation where the dollar rallies significantly against the Mexican peso. The market, of course, looks at this through the prism of the Mexican economy being the largest exporter to the United States. So you've got a scenario where this is all about the customer. If the customer is doing well, the Americans, the Mexican peso does well. And then, of course, the other way around. If we were to break out to the upside, we could be looking at the 19 pesos level as your next barrier. And it is worth noting that the 200-day EMA that 19 could attract this 200-day EMA, especially by the time we get there. All things being equal, this is a market that I think continues to see a lot of volatility. I still favor fading this pair, at least at this point, on signs of exhaustion. So if you wanted to know what was going on with the Norwegian krona, all you had to do is look at the oil market, which has absolutely collapsed. This, I'm going to guess, had a lot to do with Trump. And yep, there it is. So there is speculation that there's going to be no more global trade. Everything's going to fall apart. It's going to be Armageddon. We're now pricing that in. That's not the reality, and there will be a bounce. But we were in a downtrend to begin with. So that was just like a market that was leaning a little too far in one direction. Somebody comes by and kicks it. And that, of course, opens up the possibility of further trajectory to the downside in this case. And that's exactly what happened. This is a horrific candlestick, but I would expect to bounce sooner or later. I would not try to catch this falling knife, though. So the NASDAQ completely cratered during the day and has fallen all the way to the 50-day EMA. With this, it's worth noting that the NASDAQ is certainly going to be in the eyes of traders in the forefront of their minds. We've lost 4.35% during the day, at least in the CFD market. That's a beating. That's a significant beating. And that is the type of candlestick you're looking at that can often lead to further downward pressure. Although it's more reliable on the upside because, of course, the NASDAQ 100 is designed to go up, not down over the longer term. Otherwise, it would be equally weighted. The 25,000 level is 1,000 points above. When I did my analysis this morning for some of the other places I work for, I was talking about how 25,000 has finally been broken. That now seems like ancient history after this past afternoon. This is an ugly looking chart. When you look at the weekly candlestick, there is some support below, but this is bad. This is actually truly bad. So keep an eye on this. S&P 500 collapsing as well. Not a big surprise. It's all interconnected, and the S&P 500 is down 3.37%. It is below the 50-day EMA. It'll be interesting to see if we fall apart here. I certainly would not be a buyer yet, but there could be something over the weekend that makes everybody excited again. You just never know. This is the Dow Jones 30 has broken a trend line and the 50-day EMA, and this is not good. That being said, there is an area right here at 45,000 that I think a lot of people are going to be paying close attention to. With this being the case, I think you have to look at this through a prism of, can we find buyers here? We'll just have to see. But if it's going to find support, it needs to find it probably right away at 45,000. I have no interest in trying to short this, nor do I have any interest in trying to catch this falling knife. Let's see it bounce first before we start putting money to work. And Bitcoin, of course, has been all over the place. You can see that there has been some type of event after hours where there was no liquidity, and at one point we fell to $102,000. We are bouncing again to see if that happens to hold. I don't really know what to say about this because part of what we've got going on here is that it's illiquid weekend trading. But if we're higher as we head into Monday, that could give you a little bit of heads up, especially with the NASDAQ 100, what it will do, as the two tend to be somewhat coordinated. We have a mess on our hands, and quite frankly, that's the only way I know to put this. And you would be excused, and it would make a certain amount of sense to simply be on the sidelines. I can give you all the analysis you need, but it's your position sizing that could save your account.
Hola Prime, trade with transparency.